Good morning, ladies and gentlemen. This is your property practitioner Junior. I'm with my associate Oletu Mzolo, and we're about to enter IRONFX, the home of gold. Check it out.
I always feel like giving up, but making the money there's an option. I always feel like giving up, but making the money there's an option. Money rest, money stacks, money dress.
Welcome back to another episode of What's Best for Business, ladies and gentlemen. This is Junior Tembane, your property practitioner, brought to you by Fine Home exactly. And also, as you know, we're powered by IRONFX, the home of gold, the home of solid trading. And here today, I have a pioneer to the trading world and, of course, to the family of IRONFX. This man over here will give you each and every information that you need to know about starting, growing, and, of course, building a successful, lucrative investment through trading, right? So, ladies and gentlemen, today I wanted to speak a little bit about the history of trading, take you a bit more back in time, to understand where trading comes from, right? Its function, and how it kind of drove the economy to where it is today, right? From a very low scale, from where it began to where it is right now, So, and how all these multiple economies and companies contribute in the marketplace, right? So, in the studio today, we have Mynheer Greg Klengelius, right? Did I pronounce that right? Thank you so much. So can you tell our audience a bit more about the history of trading and where it started and how it's,
I think trading started from the beginning of time, since we started noting or writing and having history. People have always traded goods. So one tribe would trade with another tribe, and this has progressed to the point that we have multi-billion-dollar markets around the world in all different avenues. We focus at IRONFX on one particular market, and that is the capital market. And that capital market is related to currencies and indices and shares, stocks. But if we look at trading, particularly in South Africa, which is quite interesting, one of the first listed or one of the first public traded companies in the world around the 1600s was the Dutch East India Company. That was the first company that the public was able to participate in the profits of the company. And it's got a big history in South Africa because that's the company that created Cape Town, created the route around from Europe to India, and that created the first settlers to land on our shores and to create a trading post in Cape Town. Yeah. So we've got a rich history of trading. We've got a rich history of capital markets trading in South Africa, and it boomed with gold and diamonds. And at one stage in South Africa, we had more than 80 stock exchanges.
Wow.
So we had one of the most abundant stock exchange environments in the world,
Exactly.
because there was so much trade going on in South Africa, trade in gold, trade in shares particularly, and shares in gold companies and diamond companies, in Kimberley and all the way down to Cape Town. There were people trading shares, and trading is inherent in our psyche. We want to buy something, and then we want to take it to someone else and sell it at a profit, and that profit then benefits us.
Exactly.
So all of trading relates around buying and selling.
And profit.
And profit. The idea is to make profit always, yes.
That's wonderful. To kind of think about how it all started from, I can't say it started as a small scale, because from the way I understand it, trading has been big from a very long time ago. Even from the time it started as a white platform, and it also kind of it's the backbone of the economy, right? And it's the backbone of where it's all directed in terms of the infrastructures, networks. Like there's a lot in terms of trading. One thing that I have understood, right, from networking, right, from countries coming together and bartering and bartering for profit in terms of beans, your oil, your tobacco, it doesn't necessarily matter. Okay, so coming to think of how trading has pivoted from bartering to companies establishing themselves and growing in the market, to the point where they now sell part of ownerships, which is stocks or shares, to the public to enrich themselves, right? So is there a difference between buying stocks in a private sector or in a public sector? Or is there a difference in maybe if we own a company together, right? Is it are we restricted to have a certain number of people as shareholders? Are there certain classes of shareholders in the company? I just want to understand a bit about that, because you can find someone who can say, I own ShopRite, right? But they don't have kind of like paperwork, or I think it's CRM or something, that CPI, or I don't remember what it is.
Yeah.
But you can actually buy stocks online, or I just want to understand more about how you acquire stocks and what are the role of stocks, and the certain different ranges and classes within the section in stocks.
Sure. So stocks. There's two types of companies in South Africa. So a lot of countries have got different legal regulations relating to companies. We've got two types of companies. We've got a private company and we've got a limited public company. A limited public company is the company that is listed on the Johannesburg Stock Exchange, and anybody can go and buy shares in that company. A private company, you can have 50 shareholders, so there's a limitation to a private company, and those 50 shareholders need to be connected to that company. They're not public. It's not an anonymous person that comes in, not being anonymous, but a person that is unknown to the company. In a listed company, you then list your company on the Johannesburg Stock Exchange, and the purpose of listing on the Johannesburg Stock Exchange is so that you can raise capital so that your company can grow.
Exactly.
So if you go to the public and you say, buy some of my shares and I will give you back some of my profits, that then the public is then investing in those companies, ShopRite, like you were talking about, and many others, and the person in the street is able to then participate in the profits of that company in the form of dividends. And that's the purpose of investing in companies, so that you can receive dividends, so you can receive profits from that company. And it is open to anybody else, and you don't need to be exceptionally wealthy to buy shares. You can buy shares in small companies. You can buy participating shares or partial shares. So anybody can go and buy shares, and then they participate in the profit of that company. You're investing in that company so that that company can pay you back for your investment, for your capital. That company is going to take your capital that you've invested in them, and they are then going to go and grow the business. So they're going to go and buy assets. They're going to go buy things. They're going to spend on assets or on whatever resources they require so that they can build the company.
Okay. Speaking of stocks as well, I need the audience to understand how you can acquire stocks, or work your way through stocks with IRONFX. How do you acquire stocks and work through stocks? Speaking from a perspective of someone who doesn't know, the first basis of, okay, I now understand what stocks are, and I've considered taking an action towards getting them or whatnot. So how can IRONFX help people out there, in stocks, etc.?
Once you've opened an account at IRONFX, you've got access to about 250 stocks around the world. So we take the best shares that you can find in New York, in the New York Stock Exchange, the best shares that we can find in NASDAQ, the best shares in the London Stock Exchange, and stock exchanges around the world like Hong Kong and Tokyo, and we put those shares and we list those shares for our clients to be able to buy and sell. Once you've opened an account at IRONFX, you'll then have access to those shares, and it's as easy as 2 clicks of a button, and then you become a CFD shareholder of those shares. And what that means is that you will participate in any capital growth of that share. So if you can buy Microsoft, you can buy Coca-Cola, you can buy. There's numerous amounts of shares that are listed, and you can go and by a click of the button purchase those shares and keep them in your portfolio. In terms of shares, they're a little bit of a longer term holding. It's not like currencies, where currencies you can trade in and out every day. You can buy them in the morning and sell them in the afternoon. Where shares, you can do that as well, but it's more preferable if you keep it over a longer term, a few weeks, a few months, a few years. People that have made exceptional wealth, when we talk about making a lot of money, are people that have bought certain shares and have kept them over the long term.
Exactly.
You could have bought Google at $20. It's now in the thousands of dollars. So your capital growth it
depends on the initial amount that you had invested on.
Well, the price that you had paid for it. So if you had paid 20 years ago, if you had paid $20 for Google, you're now exceptionally wealthy because that company has worked for you. They took your $20 to go in South African terms, your 20 rand, and they used that to create more wealth. And we know what happens with big companies like Coca-Cola and things like that. That have done exceptionally well over a long time.
I wanted, for those who can't distinguish, the difference between actually it's a good question. Distinguish the difference between acquiring stocks through CFDs or via CFDs, or is there a difference? Can you distinguish the difference between acquiring stocks via CFDs and actually having buying stocks, going straight to the corporate company or whatever and buying? I don't know how speaking from a perspective of someone who doesn't know how to buy stocks and how to work their way through stocks. I want to understand how do you distinguish the two,
So if you're going to be purchasing shares directly from the JSE, for example, and you're going to be paying the price that share is being traded at. So if something is traded at 100 Rand, you're going to pay 100 Rand per share, and you're going to put 100 Rand per share. Utilizing CFDs, you don't require to put down the full amount. You put down 10% of that amount. So you put down 10 Rand, and you have the exact same exposure as someone that put down 100 Rand. So you don't need to put out all the money for the share. You're buying it on a margin rate, which is 10%, and you've got the same as what someone else who has bought it at 100 Rand. If it goes to 101 Rand, your 10 Rand goes up to 11 Rand. So the 10 Rand that you put in gains 10%, whereas the person that has paid the full price only goes up 1%.
1%. Wow.
So you exponentially can move up better in your favor. It's much more lucrative.
Perfect. I wanted to also. Did you wanted to add something else?
Well, it is more risky as well. So it becomes both beneficial and risky, and risky on the other side.
Why would you say it's risky?
Because the leverage is increased, and leverage we can get into leverage, but leverage means that you only put down a small amount to get the exposure at the bigger amount. But when the movement moves 1% on that side, it moves 10% for you
on the other side.
But it's the same going the other way. If the share price goes down to 99 Rand, your 10 Rand becomes 9 Rand. And that's a 10% move. So it can move up and down. There's more risk in buying with CFDs, but there's greater benefit. There's a lot more benefit when the instrument is moving in your favor. If it's moving in your favor, you're making 10 times the amount as what you would be making initially by putting down the full amount.
So with that, I kind of have a question. Maybe if if I own a brand, it's doing very well, it's selling all over the world. It's these shirts, Junior, right? So I sell Junior shirts all over the world. So now someone now wants to come through and franchise, kind of have their own franchise of the Junior store and sell whatever that we're selling, right? So the question here is, how do I now, do I have to buy shares in the specific company and then get permission or the thumbs up to franchise? Or how do I go about doing that if I want to franchise if I want to buy shares in a specific country, a specific company, and franchise it? How do I go about and do that?
You have, as a shareholder, you won't be able to franchise it because you're not, other than if you are the majority shareholder, then you can dictate what you can do with the company. But as a minority shareholder, your purpose in the company is to give the company capital, and that company will then utilize the capital to grow the business. You won't be able to franchise that company by being a shareholder. So you'll benefit from the profits, and that is basically as a shareholder what you receive, and you'll benefit from the capital growth of the price of that company.
Exactly.
So when a company is doing well, they will then make profits. Those profits will then be distributed to the shareholders. More people will want those profits, and by more people wanting those profits, there'll be demand for the share price. The share price will go up. And that's that. As a shareholder, that's your only participation with the company. Franchising will be a different avenue of accessing a company, but that will be companies that do franchising, that want other people to come in and sell their product. So when you want to sell your product and you want to franchise it out, you need to then franchise it out to someone that wants to take your product and sell it. Most franchises tend to be, it's not exclusive, but most franchises will then be food places like Steelers and McDonald's and things like that will then franchise the business out. The risk is then taken by the franchise. But the risk of a shareholder is you only risk the amount of money that you put in. You can't risk any more. Because if the company goes down, then you're going to lose your money. But if you do your analysis properly, then hopefully the company makes money.
Exactly. That's why you need to come to IRONFX, because this way you will get the perfect kind of you will get the perfect advice in terms of where you should buy your stocks. It's what I also wanted to ask in terms of, let's say I've heard the information on stocks, etc., and then I decided that I want to, start investing in stocks, etc., buying them. So, but I just don't have, time, or, I just don't have enough information on them to the point where I just don't want to mess anything up. Is there anyone in-house that could assist me, maybe with my account? I just want to buy stocks in like Coca-Cola or something. Is there someone who can manage that account for me, and someone that can check out the perfect investment opportunity for me, and then kind of like grow it for me? Is there someone that can do that in house?
There isn't. So at IRONFX we don't give advice. And that is deemed advice. And you need to go to a financial advisor to give you that type of advice. But at IRONFX we have analysts that will send out analytical information on a daily basis. So they'll send out emails, they'll send out different methods, webinars, things like that, where you'll be able to go and learn and also see the shares that are good to buy. And then you can make up your own decision if you want to buy them or not. The analyst will give you the information that says this share is good for this period of time, and it looks like it's on the way up, things like that. But you need to ultimately make the decision yourself. A financial analyst will be able to give you more advice in the sense of this is the pack of shares that you need to buy. We give you access to the share itself. And we can teach you and train you how to buy the share and how to go about purchasing the share. So we assist you with that. And once it's in your portfolio, then you need to monitor it yourself and see how long you want to keep it for. It's called the holding period. And you need to, before you buy the share, you need to say, okay, I'm going to hold this share for 2 years or 1 year or 6 months or a month, and then I'll reassess my investment after that period. And normally it's a good thing to keep your share for 6 months and then reassess. Because if you keep your shares for 6 months, then there's a cycle in South African markets, 6 months, in American markets, it's every 3 months, where the company will pay dividends. So it's going to pay dividends in 6 months, it's going to pay dividends in 3 months. You then reassess. Is it still going good? How long do I want to keep it for?
Exactly.
But if you're going to invest in yourself for the long term, or you're going to invest in your children, or you're going to invest in family, then you need to keep those shares for a long period of time, or longer period of time. And that's where you're looking for blue chip shares. And a blue chip share is a share that has given you dividends consistently over a long period of time. In South Africa, if you look at shares like the banking shares have done well over the years, and they consistently give back profits to their shareholders. So you look at banks, and you say, I'm safe utilizing or buying shares in a bank. If you're looking at growth companies, you're going to look at small companies that are growing, and you can see boom shares like Sasol in the early days, boom shares, Capitec. Capitec came onto the market at 50 cents and it went up to 180 rand. It's exceptional growth.
It's really, really exceptional.
And it's exceptional wealth creation. This is the biggest wealth creation industry, if you want to call it, or market, in any aspect. Vodacom, boom shares that when there's innovation and technology changes, then these shares benefit. So MTN, you could have bought MTN at 1 rand.
At 1 rand.
And it blows out out of proportion, or blow straight up, because they grew so fast, and they grew exponentially. They went round the whole of Africa and the world, and that created wealth. If you had shares in MTN, you've created wealth. Someone else has worked for you.
That's really, because one thing that I could understand now that I understand is that you can buy shares at a very low price and watch them skyrocket depending on how these companies perform, right?
Yeah.
So depending on how these companies perform, you can it doesn't necessarily need, you don't necessarily need to have millions and millions of rands in your bank account to start, investing in stocks, or enriching yourself through stocks, So if you're out there and you've heard this information and you want to really enriching yourself, really want to start investing in stocks, you can come through to IRONFX. I'll leave you the link on the description below. You can click it, and then you can register, and then you can we'll take it from there. But you need to register on the link that I will put there on the description below. You will see it down there. So I also wanted to ask, since we're speaking more about trading, I wanted to ask a bit about trading volume. Our viewers would like to know more about trading volume. What is it? What is trading volume, and how does it affect? How does it impact or affect the marketplace, etc.?
Trading. We're talking about trading volume.
Yes,
someone wants to come and trade.
Yes.
Someone wants to come and trade. Okay, so when someone is starting off trading, what I always tell them is make sure that you trade the least that you can. So in currency trading and in most other trades, you trade 0.01. So you start off with trading 0.01, the lowest amount. And the lowest amount will give you an indication on your risk appetite. So currencies and shares and everything goes up and down, up and down, up and down. You might be making money for a short period of time, losing money for a short period of time, making money for a short period of time. That will give you an indication on how your risk appetite is and the psychology behind trading. And if you increase your trading volume, it might become a point where the trading volume is too high for your risk appetite, and then fear and greed creeps in. And fear and greed is the two negatives of trading. Number one, if you fear that you're going to lose money, you're going to make the wrong decisions. If fear comes into your psyche when you're trading, then you're going to lose money because you're going to run when you're not supposed to run, and you're going to close positions when you're not supposed to close. And if you're greedy, you might not want to take a profit of $10. You think that you can make $100, and it gets to $20,000 and comes all the way down again, and greed then steals money from you. So the idea behind trading the lowest volume is that you get used to trading that amount. Once you are comfortable with trading that amount, you increase it to the next level, a 0.02. And if you are very comfortable, you then move forward and you increase your volume so that you can get greater returns on your trades. But if you go in and you start trading high volumes early, then and you don't understand the movements and the risk that it takes, suddenly you might be losing a bit too much money, and then you run and you catch your positions at the wrong time. Whereas if you had traded a small volume, you would then be able to roll and continue with your trade, and that tends to be the best method of trading.
So what would you say is the best minimum amount to start trading in South Africa in this economy right now, and with IRONFX, of course? What's the best minimum amount that you would start trading with?
So that's a very, very difficult question, because everybody's liquidity, or the amount of money that they have, differs. It depends what your objective is, and Again, it depends on how much money you have that you want to invest with. But you can start with any amount. You can start with $50. You can start with $10. It becomes more and more difficult the lower amounts, because then you don't have too many trading. You don't have too many options. With $10, you can trade one trade. With $50, maybe two or three, so that you're there. So the greater the amount that you have, the greater the less risk you start having. If you've only got $10, you've got one chance. If you've got $1,000, you can have 20 chances, 30 chances, 50 chances to make money. So you can have one loss and you can make 10 wins. Whereas with the $10, you've only got one chance, and that you can lose your money.
Exactly.
So the amount that you put in doesn't necessarily mean that that's the amount that you're going to trade with, but it gives you peace of mind, so that that if there's a small movement, you're still in the game. So I depends on what you want to trade. Currencies are the easiest and cheapest to trade. So when you trade currencies, then you can have less amount because the leverage there is higher. But as you go into indices or you go into shares, then you need a greater amount. So depends on how much you want to put in. Doesn't mean that's the amount that you're going to be trading. You can trade a small portion of that, but at least have peace of mind that you've got what's called variable margin. You've got enough capital in your account so that it doesn't stop you out. It doesn't take you out when at the wrong time.
Because there's this for people who don't yourself. You've blown that account before. It. So when you see that rate, So what happens now is, when you have minimum amount of money in your platform or in your marketplace, etc., it determines the certain number of trades you will open, and of course the lot that you will use. You can't open a very large lot size with very small amounts of money. You will lose it instantly. And also you need to be strategic and wary and have emotional balance when you're trading, because as Meneer has said, it doesn't need you to be a greedy person, right? Know your target, right? Know that, okay, today I'm looking at risking how much to make how much, or risking how much, it depends on risk and reward, right? So you need to know your target, you need to know how much money you're willing to lose, and you also need to know the turnover that you think that you would like to make on the day or on the trade, so that you kind of like give it time, or act act respectively, because you can open a trade, go through losses for a couple of moments, or maybe a couple of minutes or hours, and then when finally the market bounces back to profits, you see that small amount of profit and exit, not knowing that that's why you need to strategize, not knowing that if you had stuck a bit longer, in you would have made high profit margins, right? So with that, I think I quite understood the fact that you need to understand exactly why you're risking the amount that you're risking, So I think we've covered that one.
Yeah.
What did you want to add anything?
I just want to add in terms. There is a question always: how much is the minimum amount that I must put in? There isn't a minimum amount. You need to be comfortable with the type of trades that you're going to make, and those type of trades that you're going to make are the type of trades that you're looking to do. Can be from very small trades, but at least have capital behind the trade. When it moves up and down, it doesn't take you out.
Doesn't take you out.
Because a $50 account can be blown quickly. A $10 account is going to be blown. It's either going to make a lot of money or it's going to be blown. So that's the big risk that you take with a small amount. The bigger amounts, you can ride it out. If you're going to be trading shares, you can ride it out for days and weeks and know that eventually most of these companies are going to make money. And if they're going to be making money, then you are going to be making money. So the risk becomes less and less and less. The greater the amount that you put in.
That's why you need to have calculated risks. You know, that's why you need to. It all comes down to it's like kind of explaining why, you know, the whole idea and concept of, you know, risk and reward. You know, it all, the backbone behind all of this is calculated risks. So you need to know exactly how much you're willing to lose or risk, you know, for the profit that you know, hopefully, you know, wanting to reach, you know. In indices, I don't think I've ever touched on indices. One of our viewers also asked about indices and what their role are, you know, and how they drive the economy and what how you know they originate, kind of, you know. So I would like to know more about indices, and yeah, how they work.
How they work. So an index is a typically it's not a tradable instrument. So but we trade the derivative of that instrument. So we trade the future, or we trade a CFD on the index. An index is the definition. It's just a basket of shares. So if we go to Nasdaq, we get the Nasdaq 100, and there's 100 shares in the Nasdaq. So they put them all together, although the Nasdaq index, and they put all of those shares together, and they create a number, and that number can be, just say, 1,000. And if the shares move up, so the index moves up. If the shares move down, so the index moves down. So it's a basket of these shares that is called an index, and that just means that market itself is run by those, or is driven by those shares, and those shares then create that market. So in the Johannesburg Stock Exchange, the 40 biggest shares is called the JSE Top 40. And that top 40 is a combination of the top 40 shares in the Johannesburg Stock Exchange. You can go buy all those top 40 shares by buying the index. So if those 40 shares move up, or the majority of them move up, then the index will move up. If the majority of those shares move down, so the index will move down. You have access to trading the whole market. So you have access now by trading an index. You're trading the whole market, not the whole market, but the majority of the market, or the top shares in that market. Like the US 30, which is the New York Stock Exchange, or the Dow Jones Industrial Index, which is 30 of the biggest shares in the New York Stock Exchange. 100 shares in Nasdaq. You can go to London and you can have the FTSE 100, which is the 100 top shares there, or the FTSE 250 or the FTSE 500, the same as the US, where you have the S&P, which is 500 shares on the New York Stock Exchange as an index, as a basket. You're trading that whole market, and understand that the markets are moving on economic news, and that'll move it up and down based on fundamental economic news. You've got access to trading those at IRONFX with leverage and on CFDs, which means that you don't need to pay the full amount for it. Yeah. And that'll give you access to trading those shares. So if the Americans are doing well, the economy is doing well, if the interest rates are going down, which is one of the fundamental reasons that shares will move up, then people will take money out of getting interest and go and invest in shares. And if people invest in shares, so the prices will move up. So typically over a long period of time, it's the best place to be. It's the best. You can stick in index on the long term, but you get traders that will trade it short term. And that short term trading can be minutes. You can buy it today and sell it tomorrow. Or sell it buy it now and sell it in 5 minutes and make a profit. It's exactly the same as buying something from this shop and then going and selling it to your friend down the road. You're looking for profit and you're looking for movements in your direction, up or down. And you can make money going if the markets are going up. If there's bad news and the markets are going down, you can make money going down as well. Yeah.
Yeah, I quite understood that, that, one thing I love about trading is it doesn't necessarily have a root or specific, you can make money regardless if the market goes up or down. You can make money regardless if the economy does good or bad, I think. So there's quite two advantages that I've heard. There's more obviously, but there's certain information that clicks the mind. When I start thinking more about how I can create a lucrative investment for myself. So in cryptos, I've heard quite a lot about cryptos, to the point where I'm a bit skeptical about involving myself in any crypto business, etc. I've heard from, I won't name the sources, but I've heard from transactions that should be like hidden transactions. I've heard a lot of things about cryptos, and most of them aren't good, And at the same time, I've heard good things about cryptos. I've heard that you get, for example, Bitcoin is also a crypto, right? Ethereum is also a crypto. So, and you can, one Bitcoin is I remember researching this, I remember last week or something, and I found out that one Bitcoin is somewhere around over 1 million. It's somewhere over 1 million. I just don't understand how. And I want to also understand the basics of these cryptos. I want to understand how they work. I want to understand, how the underground or the dark world can use cryptocurrencies to launder money, or to, kind of do safe transactions without, financial institutions knowing about it, etc. Because it's one of the things that are impacting the people out there. There's a lot of people that have experienced bad, that have experienced a very dark path in cryptos. But some people out there don't understand the reason why and how all these things can go wrong, and why you need to work with the right people when it comes to involving yourselves in any of the fundamental topics that we spoke about today. It's very important to put yourself in a position where you speak to a professional about something, and all these advertisements, I see these advertisements from Facebook, some of them are sourced from Google, etc. So before you engage yourself with any of these cryptos and anything, maybe you can make an inquiry in IRONFX, and then maybe we can have a conversation with you. I would like to understand what cryptocurrencies are, and what their role is on the marketplace and in the economy, and actually what their role actually is.
So cryptocurrency is a currency. It's the same thing as our rand. It's a means of exchange. And it's a holder of wealth. Even though it's a volatile holder of wealth, but it's still a holder of wealth. But it's a means of exchange. So when you go and buy a liquid fruit at Checkers, you give them rands, they give you the liquid fruit. You exchanged something. You exchanged your money, and they gave you a product. It's the same thing with cryptocurrencies. Cryptocurrencies are there as a means of exchange. So someone can go and buy something and transact. They can trade by utilizing cryptocurrency. In other words, on the physical market, you can go and buy something with cryptocurrency. It's a means of exchange. It was originally designed as a means of exchange and an easier means of exchange for trade around the world, and it revolutionized the trade around the world because it's got extreme benefits, good benefits, very, very good benefits. If you for example want to go and buy something in Malawi, you have to go change your rands to dollars, then have to change your dollars to kwacha, so that you can go buy something in Malawi. But with cryptocurrency, if you both have cryptocurrency, you can then exchange it with cryptocurrency. You don't need all of these other steps. That's the good part of cryptocurrencies. The bad part about cryptocurrencies is that anybody can list a cryptocurrency. The only value that cryptocurrencies have is that means of exchange. And if other people want to use it as a means of exchange. So if I've got a cryptocurrency and no one wants to use it, then it's worthless. But if I've got Bitcoin and everybody wants to use it, then it becomes 1.3 million rands worth for one Bitcoin. But Bitcoin is not traded in the ones, but the majority of it's traded in decimals of the ones, in 0.00001 is what it's traded. So you can trade it at a very, very small amount. And if you're wealthy, you can trade it at a big amount. The negative part about Bitcoin is that it created currency flows for people that want to do money laundering, that people that want to do terrorist activities, that want to do certain things that they don't want anybody else to see.
How do we protect ourselves from these kinds?
We've got regulation related in South Africa to that effect. So regulation is coming into South Africa. It's protecting the consumer. It's protecting people taking your money and laundering it or stealing it. And these things, it needs regulation. And regulation is in South Africa. And we're regulated by the Financial Services Conduct Authority. And we regulate it so that we can protect our clients and our consumers. And if you trade cryptocurrencies, you're trading cryptocurrencies on our exchange. And that'll give you peace of mind that you will receive what you buy or sell. Cryptocurrencies are there for a very good purpose, and they do good work. And because they do good work, more and more people want cryptocurrencies. They want Bitcoin, they want Ethereum, they want Dogecoin, and those are. If more people start using cryptocurrencies, so it becomes more and more valuable because there's utility value. So you can buy something from someone in South America utilizing Bitcoin instead of waiting for the currency to actually land on that side. If you're using Swift or whatever, it takes 2 or 3 days. Yeah, Bitcoin, you can do it simultaneously. You can buy it, sell it, you can trade with it, you can do it simultaneously. It speeds up the world.
I'm hearing some good things about Bitcoin. I never thought this day would come, guys.
Yeah.
So I also wanted to ask, does IRONFX cover clients who want to work with cryptos? Does how does IRONFX cater for clients who use cryptos?
So on our side, cryptos, you can fund your account with crypto if you like. If you own crypto, you can fund it your account with crypto. We've got CFDs on about 40 of the top cryptos. And the word crypto comes from the Greek term crypto, which is crypto, which means to hide, which is something that's hidden. And the whole idea behind it was to have an anonymous exchange of funds. So if I want to send you crypto, my name's not going to be on the exchange. My address, my crypto address, you can find, and the transaction you can find on the blockchain, but it's supposed to be anonymous. And the whole idea of anonymity would be that you don't want anybody else to know what your transaction. There's good and there's bad to that. So people will utilize it for negative stuff, and some people, and the majority of it will be utilized for good stuff.
Good stuff.
Crypto is there. Crypto has utility value. It's got the utility of exchange, and in that you can then trade crypto, and you can trade crypto on IRONFX, and you can then go in and buy crypto at a leverage. You don't need to pay the full price. You can pay a leveraged amount or a geared amount, and then you then participate in the movement of crypto. Yeah, and if you had bought crypto 10 years ago, you would have paid $100, and now you're paying 60,000. Yeah, so you would have made massive amounts of money. Massive. It's a good thing to hold. Some of the best strategies for crypto is to buy and hold. So you buy crypto, you buy Bitcoin today, you buy a small portion, and in a month's time you buy some more, in a month's time you buy some more, in a month's time you buy some more. Doesn't matter if it's going up or down.
I actually didn't know that you can create your own or list your own crypto. I didn't know.
Anybody can.
Anybody can.
Anybody can list their own crypto, but the point is that there are probably 200-300 cryptos out there. But do people use them? If they're not used, they are useless.
So what do you think drives the usage of these cryptos? What would make people to now start using these? Because one thing that I now understand is the more people now start using these cryptos is when the value of the crypto itself kind of rises, right? Mm-hmm. So what as the person who listed that crypto, I know this is off topic, but as a person who listed that crypto, you know, what is expected? What would make people to start, you know, using your, because there's more than 300, but I only know 5 or 6. You know, I never knew that there was over.
Otherwise, no one uses. No one uses.
How do you get people to start now using your crypto?
Well, one would be what is the utility value, and is there someone else on the other side that is willing? That's why Bitcoin was so cheap initially, because there wasn't so many people utilizing it. But if there's someone else on the other side that wants to buy or sell crypto, you've got an exchange of crypto, then you're creating a market, and that market will then create demand, and more people will want to come in and utilize it. But the utility value is for cross-border payments, for quick, easy cross-border payments, for secure cross-border payments. And the transaction is on the blockchain and cannot. And it's secure, which means that if you're sending it to the right address, it will reach the right address, and that person will receive it simultaneously as you send it. Well, more or less, it takes a short period of time to go through the blockchain, and the blockchain will then check the ledger, and it will debit your account, it will credit their account. So ease of use, speed of use. Anonymity of use, it's anonymous.
Security also.
And it's secure, correct. So there's a lot of factors that are much better than utilizing the old systems of Swift, for example, which takes 2 or 3 days. It can take a week. So if you want to buy something and you want to buy it straight away, and you don't have that person's currency on the other side, you can use crypto. You can use crypto.
So I hope you guys got more insight about that, and now you have a clear thought and mindset of what cryptos are, and I need you to be careful of these, you know, scammers of what cryptos are. You need to now take your thought process to acquiring the best information about any investment before partaking in it, right? So when you want to, you know, start using cryptos, you can also come through to IRONFX. These are the best people in the game to help you use them the right way, and of course avoid all these disadvantages that come through with using cryptos. Okay, so I wanted to speak more about what value does IRONFX bring to its clients, right? And what is the future projections for the clients of IRONFX, and hopefully what are the hopes of what are the hopes for IRONFX clients, new IRONFX clients, that are currently want to work.
Yes. So, give you a quick rundown on IRONFX's global footprint. We are in 180 countries around the world. IRONFX is the global leader. We've got 180 countries. We've got over 40 offices around the world. We've got about 1.5 million clients. And we welcome all new clients with open arms, and we try and assist all of our clients to go from either not knowing how to trade, to teaching them how to trade, to giving them the tools that can make money on markets. Everybody is out there to make a profit, and this is the fastest route to making profits. So we assist our clients in how to trade, and we don't give specific advice, even though we are licensed to give advice, but we don't. But clients can reach out and get our analysis, and get our analysis on a daily basis that says this is what we've looked at today, and then you can make up your own mind. You can say, okay, I want to buy this, I want to buy that. Gold particularly is one of our favorites, and gold has been moving up and down, and it's a great trading instrument. If you look at the hard commodities, we trade gold, we trade silver, we trade platinum and palladium. The hard stuff, oil, is also considered on the hard. So you can trade the oil price, and you can trade the gold price or the silver price. That's the hard stuff. But for some of the more down to earth traders that trade the soft commodities, we've got commodities that you can trade in corn, in mealies. So there's a market for mealies. There's a market that says mealie price moves up and down.
I saw wheat. Is wheat as
wheat?
Yeah, I saw wheat as well.
We trade wheat. So we trade wheat. We trade cotton. We trade sugar. So those are the soft commodities. If you want to trade the soft commodities, it's a little bit more difficult to trade the soft commodities, but for those that want to, we've got the platform, and we've got the access to trading soft commodities. And sometimes things like copper has made a tremendous run in the last couple of years. That is great for someone that wants to trade something like that. And if the world economy picks up as it's picking up after COVID, suddenly copper went through the roof because people were demanding more copper, because there was more industry needed copper. So you can trade those at IRONFX, and the platform is there. We can teach you how to utilize it and trade it.
So in terms of fundamentals, does IRONFX also provide fundamentals for its clients, or I know fundamentals, you can get them from your news or source them from, but then in terms of kind of like relevant fundamentals that clients will use to open trades, does IRONFX provide that for its clients?
Yes. So on a daily basis, we have a daily newsletter on fundamentals, which will then encompass most of the major economic factors, things like economies in the US, interest rates, inflation rates, things that influence markets. And our analysts will then comment on whatever the news is coming out. So if something's going to come out in a couple of hours, you'll get a newsletter stating, this is what's happening in a couple of hours. CPI is coming out. This is what you must watch out for. This is what this is good. This is bad. If this happens, we try and give our clients as much information as possible, because information then gives you the tools so that you can make a better
Better
decision. Yeah.
Perfect.
Yeah.
I think it's best that our clients will are well assured, and I feel like, you know, for us to drive a whole initiative to get, you know, as much people as we can to start trading, I think it's our responsibility to give them a solid foundation when it comes to trading with the right brokerage, right? And IRONFX is that brokerage, right? Because you're trading with people that actually want you to make money, right? Then understand the whole perspective behind a client successfully, you know, executing their, you know, their goals, or can be long term or short term, right? You need to make an informed decision, right, to be within the right brokerage to make good money for yourself, right? And IRONFX is that brokerage, right? So I also wanted to, you know, add on a bit about inflation, right? Since inflation also is part of what's I don't know if it's the result or part of what's affecting or impacting the market, right? From what I know is inflation is when prices go up, right? And then when prices go up, it means that's not good for the economy, right? That means now the rand will go higher, right?
So value, yes.
Yeah, that is value. So I need to understand a bit more on what inflation, what's the role, what inflation's role is in the marketplace. Does it have any, you know, because I know for a fact that the volatility in economy, right, has a very huge impact in the market. So inflation is part of the factors that are involved in the volatility of the market. So can you touch on that? I want to understand how inflation kind of impacts the market.
So inflation is a very negative factor in the market, but it's created by positiveness. So when an economy is very positive and it's growing substantially, then there's more demand in that market. And the more demand, we know that if two people want to buy this lamp, then me as the seller would want to get the best price. So if one person offers me 10 rand and the other person offers me 11 rand, I'm going to take the 11 rand to sell my lamp. That in itself is inflation because the demand is increased. So when we demand more as a country, when we demand more TVs, more cars, more, when we need more things, more income. So if we demand a pay rise that's above the inflation rate, then we're creating inflation. When Eskom comes in and pushes their prices up, they're creating inflation. They're pushing up prices. And by pushing up prices, everybody becomes poorer. Because now my 10 rand, I can't buy this lamp anymore for 10 rand. I have to buy it for 11 rand. That makes me poorer by 1 rand. So inflation is detrimental to the country. So a Reserve Bank has got the job, and the only job is to maintain inflation. That's the mandate. And by maintaining inflation, they utilize different tools so that they can increase or decrease demand. And that's interest rates. So they'll increase interest rates when demand is too high, making it more difficult for people to spend. And that way, if they can't spend, then they don't have the demand. Then that lamp's price is going to come down to 10 rand. But inflation has got the negative part that if there's a difference between South Africa's inflation and our trading partners' inflation, we become poorer. So the whole country becomes poorer. Not one lot of people or a different lot. Everybody becomes poorer because your rand buys less. And if your rand buys less, you're poorer than the American that can buy with dollars. So inflation needs to be kept under control, and it's a balancing act. Reserve Bank has a major job to do that. If we saw in Zimbabwe, for example, where inflation became out of control, it becomes hyperinflation after a stage, and that means that that was 11 rand is now suddenly 1.2 million rand. Okay. Which means that everybody's money is worthless.
Yeah.
So we need to maintain inflation in the country, and keep it under control, and keep the factors that push inflation up under control. Some of them has got to do with how we manage our country, how we govern our country is very important. And inflation makes people poorer, and inflation then affects the market. So if inflation is very, very high, then the market's going to become poorer, therefore the shares are going to be less worth. And if they're less worth, they're going to go down. If inflation is under control and we can have economic growth, there's a pull and tug between these two. We have to get that balance, and if we've got that balance, then we can create wealth, and our people become more wealthy, the companies become more wealthy. If the companies become more wealthy, everybody becomes more wealthy. And so we pull ourselves up. So inflation, and to understand inflation, you then need to know that if inflation is going worse, then markets will go down. If inflation is under control, markets will go up. That's the end result of it. But there's a lot of factors going into it. And that comes to the economy itself, and the economy itself needs to generate production. We need to be productive, and if we're productive, we're creating wealth. And if a company is creating wealth, or a government is creating wealth, or governments never create wealth, they only eat wealth.
True, it's very, very true. Very true.
But if companies are creating wealth, then the people in those companies are more wealthy. And so it then filters through to the rest of the economy. And then markets go better, because then the shares will go better. Exactly. Then the rand will go better. And you can see that there's a little bit of positiveness in the rand recently, which is great. And we're sitting at the 1795 level, and that indicates that we're positive about the future. And by being positive about the future, we're looking into the future and saying we're going to grow.
Definitely.
And if we're going to grow, then everybody will benefit.
Definitely. Yeah. So what do you think are maybe the three main kind of like factors that are affecting the South African economy right now?
I think corruption clearly is the biggest.
Number one.
Because corruption steals from everybody. It makes everybody poorer. Because if that 1 rand was utilized for everybody instead of taking it and utilizing it for themselves, whoever's utilizing corruption, then everybody benefits. Whereas you can't benefit. You can't say that you for the people of the country